Hey, this is Sasha, and welcome to another episode on Hungry for Returns, where I share with you my thoughts on investing, trading on the stock market based on my own successes and failures. So today we have a question about technical indicators. We're looking at the option technical side, and this relates to the top 2 technical analysis indicators on episode number 225 that I talked about. Now, if you have a question, you want to submit it by voice. Sometimes it's more detailed and I can answer it a lot easier. Do that on our website at tradersfly.com, and you should see it, submit by voice, kind of tab there or hit the contact button. Anyway, let's take a look at today's question here, and let's get started. So here, if we look at today's question, we have one coming in from Mark. Thanks for another helpful video. Do you believe implied volatility is a useful indicator for option trading? Now, in this episode, we've talked about the top 2 technical analysis indicators that I use, which is really price and volume, because a lot of that you can stem from that, from those indicators. So from price and volume, you can get a lot of things like moving average. If you don't know what I'm talking about, refer to the video there. Just look it up based on that title. So as we go into this and we think about trading options, the reality is even when you trade options and we take a look at, let's say, a stock like Apple, you can really get still the volatility idea of where things are based on how the stock has moved. So for example, when a stock moves down very quickly, like right here, I know volatility is going to be higher. Okay, so I don't need to really look at the volatility to get the inside of it. When the stock is moving up right here like this, when we have a lot of bullish or green days, I know volatility will be lower. Now, the whole point of knowing when volatility is high or low, for example, understanding implied volatility, you don't need to look at it as an indicator. You need to know what the number is when we look at the VIX. And the whole point behind knowing where it is it's at the lower end right now, it's been going down, is to know where you're putting more risk on. So for example, it is better to do, I wouldn't say better, it's more advantageous from a volatility standpoint, okay, again, from a volatility standpoint, to put on things more like iron condors when the VIX is high, so selling more option premium than buying. When volatility is at lower levels, okay, it's safer from a volatility standpoint to put on things like calendars, double diagonals, basically more positive vega trades, because we know volatility has a higher chance of going up from there, and you can get burned on the volatility side. So this is really the whole point of knowing and understanding the volatility of where you are. So when you look at this indicator, really, could you look at it as a trader? Yeah, you could, because now you look at it and you say, as an option trader, you say, hey, okay, volatility is at a lower point or at lower levels. It's probably better to do some positive vega trades, calendars, double diagonals, that kind of thing. When volatility is at a higher level, okay, so let's say we're at this upper range of in the 30s, it's probably a good idea to do something with shorter vega trades, meaning iron condors. You could also do butterflies. But remember, even when the volatility is high, things can whip around very quickly. So sometimes you could get burned on the other side on the movement. All that the volatility does is make it, on an iron condor, a wider range for you. So sometimes in these cases, when it's super high, you're almost good at being a value investor and nibbling on some shares. Or if you're in the option world, you could put out a much longer term, let's say, diagonal spreads in your investment long-term account. So anyways, as far as an indicator goes, could you use it? Yes, absolutely. It's helpful because you know what type of risk trades you want to put on in terms of a volatility perspective. But can you also get that from, let's say, looking at the stock itself? Yes, absolutely. When a stock is moving up very quickly, the volatility is going to be lower. When a stock is moving down very quickly, you know, volatility is going to be higher. So when is it a good time to put on, let's say, things like iron condors? When you've had 4 or 5 down days. When is it a good time to put on, let's say, calendars or double diagonals? When you've had 4 or 5 up days because now the volatility should be at lower levels and we know that volatility will go up from there. If this was confusing, you need to learn a little more on the Greeks, and then make sure you check out some of the courses that we have available on the tradersfly.com website or the Rise to Learn website, which is where the Traders Fly website will push you. So let's take a look here. If you're going to tradersfly.com, anytime you check out any of our courses and you go here, it's going to move you. All the courses are on Rise to Learn, and you may want to take a look at some of these option courses here to get a better understanding of the Greeks and of volatility if you're struggling with this lesson. Anyways, thank you so much for joining me. If you do have a question, submit it on our website at the Traders Fly website, because when you go there on Traders Fly, let me pull it up for you. When you go here, we'll have a submit a voice question there, and you can go ahead and record one, and that way it's a lot easier rather than writing a YouTube comment, because that way it's more detailed and you get a visual answer. All right, so thank you so much for joining me. Be sure to subscribe down here. Click some other cool links down below in the description for our books, courses, discounts, promotions, any other things that we have coming out. It's all on the newsletter list, and that way you're in the know. So be part of the cool group, join the list, and that way you get more insight and information as new material is released. Thanks for joining me, and I'll see you next time.